Hi everybody, this is Anna from optionsblackboard.com and hotoptionbabe.com. Up here I have a chart of Intuitive Surgical. Now, I looked at the option chain yesterday, but after looking at the charts, one of the things I noticed was the April implied volatility, or IV, was just huge. It was about 130 to 40%, depending on which strike you chose in April. And if you went to May, it went down to about 40%. So we all know in options, you want to sell volatility, but we don't do naked options. So what I came up with was a calendar spread on Intuitive Surgical. What I was looking for was to buy the front month, sell the front month volatility and buy the back month. And in this case, I chose April, May. Now, April's already gone off the expiration list, so I won't be able to show it to you, but basically what it was a debit spread. But I took in income for the April, which was a lot more expensive because of the high IV, and I bought the May, which was lower, and that was the debit spread. Here, looking at the chart, you can see this is the 2-day chart. Let's go a little bit further out. A little further out here. Let's do a year chart on it. And there's a gap up from last July here. Basically, this is a wave 3 playing out, and there's different waves in the wave 3. And that's a huge move. I mean, it gapped up back in July around, was it 180? It hasn't looked back since. I mean, that's ridiculous, really. But stocks can do that for a very long time. However, I felt that no matter what they did, the stock was fairly priced at this, at almost $400 is where it was on Thursday. So I put the time spread on, or calendar spread on Thursday. Did the April-May 350 put spread. Okay, but I didn't want April to go into the money, so I picked that April. I was debating whether 350, 360. I felt that 350 was the safest to do because this stock could move a huge amount. On earnings, 10, sometimes 12%. So I picked the 350, and here we're going to go to a 2-day chart. Here is yesterday at the open, a big gap down, and lo and behold, it got me a little unnerved that this thing actually started going higher. And so I almost had a heart attack looking at it. But we in the chat room did this trade, but I still felt that that was a head fake. One of the analysts upgraded it to a buy right after this, so my feeling was that they were wanting to dump that, and so I didn't really panic, and I didn't get out of the trade, which turned out to be an excellent trade. Now here you go. You can see here we come on down, back down, filled the gap, came completely down, started forming bear flags all over the place, just bear flag after bear flag. By the end of the day, here's where we ended up, $360.39. I called for a pen at 360 early yesterday, and we landed 39 cents from that. But that was a tremendous trade. We don't know our net profit. We know that we captured $300 per contract on the April one that the April put that we sold, because it expired out of the money. I just let it expire worthless. And now we have the May 350 long put. And I have a target on Intuitive Surgical of $340. So I'm going to hang on to it probably for another week. Probably could hold it all the way to expiration, and it might be at $340. That would be worth $1,000 if it's $340 or under, which would be huge. So that one contract, that would be one contract. So you time that in the number of contracts that you did, and that's your profit. So thank you. You guys have a great weekend, and see you on the next video.